Economic growth was stronger in the third quarter than anticipated, but Americans are still wary. Obviously, looking at today's stock market. Consumers cut spending in September for the first time in 5 months, and confidence weakened this month. Stanley, chief U.S. economist at RBS Securities, says there is no question that consumer spending is at the epicenter of most economic forecasts. He joins us now from Stanford with more. Stephen, thanks for joining us.
Hi, my pleasure.
Let me ask you about, from the looks of the market, everybody seemed pretty surprised when this number came out, the personal spending number and the income number, but it was bang in line with expectations. I mean, didn't we know to expect this?
Yeah, I think that today's market moves probably a little bit different than yesterday's. I think yesterday when the market went up, it seemed like it was pretty clearly going up in response to the stronger than expected GDP numbers. I'm not so sure that today's market, the downward move in the stock market, had a lot to do with the economic data.
What do you think that we're going to see, though, from this kind of economic data going forward? I mean, can we expect personal spending, consumer spending to continue to contract?
Well, I mean, the contraction in September was mainly just a function of the unwind from cash for clunkers, so I don't think you necessarily are going to see those sorts of really negative numbers going forward. That being said, on a quarterly basis, fourth quarter consumption spending is not going to grow nearly as strong as the 3.5% gain we saw in quarter three. And, more broadly, I think consumer spending is clearly not going to be the driving force leading us out of recession, given the adjustments that the household sector needs to continue to make in terms of savings rates and deleveraging and all the rest.
Hey, Stephen, safe to assume that we should be expecting kind of starts and stops here as we work our way out of this pretty tough recession, considering what we've gone through over the last 6 to 8 months or a year now at this point. I mean, so we're going to get some good data points. We're going to get some bad, and maybe not surprised then to see the ultimate market reaction coming off of it.
Yeah, I mean, that's exactly right. The data have been very mixed of late, and, even the market reaction, sometimes the market pays attention and other times it doesn't. So, there are a lot of things going on with regard to the markets above and beyond just what the economic data are telling us. But yeah, we're in the beginning of a recovery, so there are going to be some things that are looking good and some things that are looking not so good. And I think the other piece is, levels versus changes. The level of activity is still very low and is going to remain very low for a long time, even if the changes are quite robust.
What about the labor picture? Because we were talking earlier with Charles Ortel, pointing out that we saw unemployment get much worse after the 81-82 recession for an entire year. He thinks it's going to get worse from here, and he thinks we could see 13 to 14% unemployment next year.
Wow, that's really high. Well, I think in the end, it really depends on what sort of a recovery we have. People talk about V-shaped versus U-shaped or double dip or whatever. If we get a true V-shaped recovery, the way that we had in the mid-70s or in the early 80s, then the unemployment rate will turn around pretty quickly once activity has started to move up. So, in contrast, if we see something like what we've seen in the last couple of cycles, obviously unemployment could continue to rise for a while. We lean a little more toward the former camp in thinking that the unemployment rate is probably not too far from peaking. We have it peaking around the end of the year and then slowly starting to come off in early 2010.
What kind of growth do you see then going forward? I mean, Diane Swonka has come on and said we need to see at least 3%, probably more, to turn unemployment around and start adding jobs. Do you think that we're going to see that in the quarters going forward?
Yeah, we're pretty optimistic. We think we're going to see very solid growth, 3.5% type growth over the next couple of quarters, and then moving up from there to well over 4% by the second half of next year. I think there's good news and bad news in that. The bad news is that the levels of activity, as I mentioned before, are just so darn low that it's not that hard to get very strong growth. And therein lies the good news as well, which is that we have a long way to go to get back to normal, and so there's a lot of headroom for this economy, and I think that applies both to GDP and, maybe more controversially to employment too. The labor market is just so depressed that I think as activity starts to pick up, firms are going to find themselves in a position where they just absolutely have to add workers to get output back up.
You really believe that's going to happen, Stephen? I mean, I think don't you believe that kind of companies are going to be very cautious about kind of upping up their labor force, considering what we've been through? I mean, they're going to wait a long time until they really see demand pick up here.
Yeah, absolutely, and I think we're in that period right now. I mean, if you look at it, second quarter GDP growth was barely negative, and yet the labor market continued to careen lower. Third quarter, we got a good GDP gain, and yet, we continue to see declines in employment. So the last couple of quarters, we've had these massive increases in productivity, and I think firms are kind of starting to get to a point now where they're squeezing blood out of the turnip. I just don't think there's very much more opportunity for them to raise their production levels without having to bring on more workers.
Hey, Stephen, just got 5 seconds here. Obviously, next week, the big report is going to be that monthly labor report. Could we see any good surprises here? Just quickly, if you could.
Well, we're at minus 135, which would be a mild positive. I think we're a few months away from positive payroll numbers.
All right, we're going to leave it there. Hey, Stephen, thanks so much. Have a great weekend.
All right, you too.
Stephen Stanley of RBS Securities.
And the happy